Hello, welcome to the weekly technical analysis review. I'm Selena Nicholas, technical analyst at XM.com. Today's Monday, May 8th. So we'll look at the major pairs on the daily chart. We'll start with Euro USD. You can see Euro finally broke above the 1.10 level early on Monday, to hit a 6-month high against the dollar. The move up, though, was not sustained, and the rally faded. After hitting a high of 1.1021, we saw prices fall back down. But the 110 level is quite a significant one, since it's at the declining trend line. If we look at the bigger picture, there was this down trend line from around April of last year. So it's going to be quite an important level right now. Since prices fell back down, it'll act as resistance again. So breaking above it would be quite a bullish signal if a move above it is sustained. But as long as the market remains above 1.09, it will hold a bullish stance in the short term at least, since the market is above the 200-day moving average. But of course, a break below 1.09 support and back below the 200-day, we would target 1.07, another key level. So breaking below the 200-day would make the outlook more bearish. If we look at pound dollar now, the pressure remains to the upside after breaking above the 200-day moving average. The bias became quite bullish for the short term, but we need to see a daily close above 1.30. That would indicate that cable moved into a bullish phase again, because right now the near-term bias is quite neutral. We're seeing some consolidation just below 1.30 and around 1.29. And if we look at the RSI, it's moving just along the 70 level, so quite close to overbought levels. So this would suggest some consolidation in the near term. If we look at dollar yen now, dollar yen shifted from quite a bullish bias to neutral now in the near term. It's finding strong resistance at 113. That's a key level now, key resistance, despite rising from below the 200-day moving average, and that was from below 108 up to the 113 area. Upside momentum isn't very strong anymore. We can see this in the RSI, where the rising RSI line seemed to flatten out now just below 70, just close to overbought levels. So we would expect some consolidation now in the near term. But if we look at the bigger picture, since December there seems to be a declining trend line, and dollar yen is challenging this trend line now, and it's trying to break above 113 and also above the Ichimoku cloud. Let's take a look at Aussie dollar. Aussie dollar, it's looking quite bearish now, challenging the 0.74 level after breaking below the 200-day moving average and 0.7550. The pair has turned more bearish. It was looking a bit more neutral before that, especially since it was trading within a range in the past 5 months or so. But the bearish phase started last week. We saw a big drop last Thursday, and this bearish phase seems to be intact still. We're near oversold levels, fading, but there is some fading downside momentum. If RSI has stopped just above 30, it's not declining anymore, so it suggests that any further downside in Aussie dollar could be limited, and we're looking around 0.7350, 0.73 as important support levels to the downside. If we look at gold now, we can see gold touched a 7-week low earlier today, around 12.24. Last week, gold fell by over 3%, so it's looking mildly bearish, especially falling from a 5.5-month high. It just seems to keep falling, and it broke below its 200-day moving average, so that was quite a bearish signal. But if prices continue lower and break below 1194, that was low back in March, that would definitely change the market structure and bring a more bearish trend. But for now, if we look at RSI, it stopped just below 30, just above 30, so we could see some limited downside for now, but in the short term we're looking at a bearish bias. Thanks so much for watching and have a great day.